Okay.
Okay, so I'm going to focus on these strategies that I used in the past and made very good profits. Now you have to look at only three things, okay, to take your entries for long and short. First one, I'm going to use these check marks as a first strategy that you can use for your entries. First one is, look at the VWAP here. Example, VWAP is blue, okay, blue VWAP, check. And secondly, look at this ribbon here. Ribbon, all EMS of ribbon is red, see, second check mark. And the third and final one is this, a wave here, okay. Only need three things. If you got these three things, then you can short. See, easy. And same goes for buy signal. You need to look at white VWAP here, from here, yes. And then secondly, the EMAs, all the EMAs in the ribbon should be green. Let's bring it to front, yes. And third and last one is this wave. Whenever these three are green, enter long, simple. And it's better if you also see this trend line. Trend line will, obviously will be green. Whenever these three are green, trend line will be green. So when these three are present, you can long. See here, once again, present, long, see, and then short, and then here, from here, it's still blue or red, and a little bit red color. You can take a small move here. Uh, Let me disable these backgrounds of the scalper so I can use it as a faster. Let's make it lime and red. There you go. Okay, so these were the first strategy to use scalper and ultra instinct together. Second strategy is using these support and resistance. Okay, let me remove the check marks. So second strategy is using the support and the resistance. Look at 1 hour chart and find which support is most important for you. Look at the chart, zoom out here like this, then find the support which is most important. Go to this horizontal line here. Click here and look at the support where candles are struggling the most. Example here, okay. So if candle close below this support, then it means down. Price will go down here, down once again, and down once again. Okay, candle needs to close below this line. This is the average line where candles are struggling the most, and below it it's bearish, okay, and above it it's bullish. See, all the candles above it's bullish, and you are looking at the support and the resistance, okay, which is the most important. Look, below it bearish. Okay, this is just a, well, it will work in whatever is in front of you, not in the history, not in the historical chart. Okay, if you want to check the new horizontal line, then you need to draw it once again. Now look where the candles are mostly struggling to break. At this price, at this area, candles are struggling the most. So what you will do, you will uh, you know place a horizontal line here at this price here. Yes, see, now below it, this strategy includes you can use it with the armor, because look, candles are struggling most here. Whenever it breaks, candle close is below this um, area, this horizontal line, then it means it's bearish. And look at this VWAP, blue VWAP, red ribbon, and same, you know, 3 check marks back then. And candle closes below it, short. See now, candle close above it, long, long, again long. Whenever this scalper is green, keep long. And now again here, white, green, and green, long. See, simple. This is the second method of you know, second strategy to earn with Armour. So let me show you the next one. Okay, these are the next. You can use the automatic these support and the resistance for your trades. First, you need to look at 4-hour chart. This is a third strategy, right? Look at 4 hours. In 4-hour, check out the support. Okay, next support is this. First one is a when the uh, support like this here is a small support. Okay, if the line is small, then support is weak. If the line is bigger of support and resistance, then it means it's a strong support that cannot be broken easily. Now if this is, look at this one is weak. Okay, and now it but it hold weak supports also hold sometimes. But look, if it hold next time, now this support, the same support, becomes strong. Okay, now look at the range of wait I the range of candles becoming smaller and smaller. This is where you use chart patterns. Okay, wait, I have guy sending me a message. Let me invite him to the Zoom.
Okay, sure.
Wait. Now let me invite him. So now look at this zone. Okay, example. Yeah, I used brush. Now look at this line here. It's red, right? And look at the all the EMAs are turning red, not yet red, but they are turning red. Okay, these are the two signs on 4 hours that you need to watch. Now everything is red. Then on 15 minutes, what you need to do? Only take these red X. Don't take these green lines. Only take red
Okay.
X. So this is the strategy. Now the movement is small, very small movement, because there is a, you know, Bitcoin is in the triangle, some sort of triangle. Look, when you see the trend line is red, then you enter on the red X, you will get more profit than buy signals because everything is red on 4 hours. So in 15 minutes, when you scalp, you will have more profit. And same goes for green, you know, this green trend line. This is a super trend. This is a super trend. When super trend is green, ribbon is green, then what you get on 15 minutes. Let me show you here. Not this one. And look at this one here. Yes, that's what I'm saying. This is the same grain area in 4 hours. In 4 hours, you need to only enter in buy signals. Okay, 3 check marks, same strategy of the first white, VWAP, green EMAs, and this copper is green. Okay, now they use the same strategy to enter long. See, because 4 hours trend is green. Okay, buyers are in control. When you use these green signals, you are more profitable than these small cell signals. Okay, look, green signals are more profitable because trend is all over green. This is the third strategy. Now, I am going to tell you the fourth strategy that you can use for, you know, uh, for your trades. Now, let's get back to the 4 hours. Now, for this strategy, you need chart patterns. You know, you need to draw chart patterns to find out where is what patterns are telling you where market will go next. Now, uh, example. Now look at this here. Okay, the triangle is broken. The movement become very small and small and small. Triangle is broken. Now it's just retesting. Okay, retesting the triangle. But this is also acting as a strong resistance. Okay, whenever price touches the resistance again and again, it's more likely to break. Sometimes it could break. Okay, so we already have this green triangle with a buy signal on 4 hours. But what we need for confirmation of this green triangle, we need green trend line here, green trend line, just like this, just like this, and green EMAs and of ribbon. And whenever it breaks and the candle, 1 hour candle closed above this line, and then everything is green, just long on 15 minutes or 1 hour on any buy signals you see in smaller time frames. See, this is the one of the strategy. So these are the strategies that I can think of right now. If there are many other techniques of trading, maybe I will cover it soon. But right now, these are just four strategies in my mind. If you have any questions, you can ask me.
Thanks for that. That's definitely helpful. So I think on some of these entries, whether it's long or short, assuming you see 3 or 4 signals come up, do you how long or how many candles should you be waiting for confirmation before you should generally enter into these trades?
Candles doesn't matter. Candles doesn't matter because you need to check these three check marks only. If these three are present, then you can long. Okay, and if these three, same red, a blue VBOP, a red EMAs, and this red scalper is present, you can short. Simple. Candles doesn't matter. Candle only matter when it has to break a certain support, which is a problematic area. In this case, the 33,000 area was a problematic area. Okay, look at this. Let me draw the horizontal line here. This was the problematic area. See, back then. Let me change the color uh, to make it blue. Yes. See, now candle closed above this 33,000 area, and then see the pump. Okay, these candles only matter when it is price is struggling to break the problematic areas to strong resistance and strong supports. Now this 33,000 resistance was so strong, price tried multiple times to break through, and then finally it broke from here, and it was a strong support back then. Price, tried multiple time to break this but failed, and finally it broke and candle closed below it, and then we shorted from here. And there is another small strategy that I just you know another one that I want to tell you, because just now I remember it. So look at the divergences, okay? That these divergences label, they will help you. Now you also need to check the divergence on the scalper, okay? See, right now it's a big wave here and followed by a small wave. You need a big wave and then a small wave to enter in any signal. Now, big wave and small wave and candle are forming higher high, exactly opposite. See, exactly opposite. Yes. See, let me disable this. This is what we call a bearish divergence, because the momentum, this scalper is made with the volume, okay, volume indicator. So when the wave is bigger, then we have a more volume in the market, more buyers present in the market. Now look at the buyers, this green wave, okay, the buyers are losing ground, they are going to, buyers are exhausted. Now whenever wave changes color and you see a higher high candle, then it means it's a bearish sign. It's a bearish sign. So price is more likely to go down. And look at this. This one is green, right? This one is green, but we have a strong divergence, so it could break. Now, what we need in here, only wave up to turn blue, and this wave to turn red. Only these two. Now, ribbon doesn't matter here. You need only two check marks when you see the divergence. First one is wave up. The second one is this uh, wave turning uh, red. So you need only these two to short. Now, same goes for bullish divergence. What's going on bullish divergence? Wait, move points. So for bullish divergence, what you need is a big wave followed by a small wave, small trigger wave. See, now candles doesn't matter if they are opposite. Okay, they are opposite, by the way. Now look, they are opposite. Candles are forming lower low and scalper is forming higher high. It means sellers will be exhausted soon and they will give up. Okay, and then you can long here. Okay, price will go up. At least if you are shorting, then you can exit your short position here, because we have divergence and color is changing, so you need to get out, run fast. And that's how it works. Now we have a small divergence here, which is a bearish divergence here. Look, scalper is changing color, price is coming down, even though we have a buy signal, but there is a divergence, right? If divergence is above the zero line, this is a zero line on the scalper. If it's above the zero line, then price will fall. Okay, if it's below the zero line, divergence is below the zero line, price will go high. Okay, that's how the divergences work with the indicators. um, let me show you some examples of divergence. See, this is the example, one of the example, and look at this. A big wave, giant wave, and followed by a small wave here. Divergence, and price goes up, right? And another divergence, see, and price is going up, see. Now another bullish divergence from here, a very big wave. Okay, look here. Now price is going up because waves are forming higher high, and here it's forming lower low, lower low, and then price is going down. And there is something like double bottom here, double bottom, and wave is forming lower low, and this is also a divergence. When we have double bottom on the candle, the wave are forming lower low, and color changes, and then boom. You can study divergence in Google Images. Let me show you. Here's a, okay, I covered it, I think. So here is a bullish divergence here. Uh, Here, see, bullish divergence moving up. We have a long risk high, another divergences, indicators are pointing divergence in and then coming down. So many things that you can use in the Armour indicators. Let me um, show you in Google Images. Here are the divergence. Only there are 4 types of divergences mainly that which are most important. Let me yes, here look. Uh, these candles are forming lower low, but indicators are forming higher high. It means sellers are getting exhausted, and then we will see bullish divergence. Example. Example this. Candles are forming lower low, right? Lower low. And indicators are forming higher high. Look, higher high. So this is a bullish divergence. Look at the example here, right? And same goes for bearish divergence, just like I show you. Uh, candles are forming higher high here. Higher high. And now indicators are forming lower low. Example like this. Oh shit, I merged it. Um, See, lower low. Now price will go down. This is the example of bearish divergence. And this is the another hidden divergences, the bullish divergence, like I explained you earlier. Like I explained you earlier, hidden bullish divergence. We have a double bottom and indicators forming lower low. Double bottom is a hidden divergence, okay? And now price is going up because of the divergence. See, look, sometimes double bottom is also in the indicators and sometimes is in the candles. So here is a bearish divergence. I think I covered it. This is a hidden divergence, okay? So a little bit wave. This is the exactly opposite divergence that I told you. See this one here, hidden divergence. So the color change will help you to find these divergences, okay? So you need to study it more from the Google Images, types of divergences and how you can use it. Okay, these are the few strategies that I use. And there is one more thing. It's called trading short patterns. If you want to become a professional trader and you want to make money 24/7 every day, almost every day from trading, then you need to study the patterns of the market, of the stocks, crypto, forex. You need to study the patterns and you need to learn how to draw these patterns. Look, example, this is a bull flag, bullish pattern pennant. This is a bull flag and this is a pennant. It's called bullish variant, okay? This is a bear flag and bear pennant, and this is a inverted head and shoulder, cup and handle, falling wedge, rising wedge. These kind of pattern you need to draw it on your charts to find out manually where the market will go, and you can use these indicators to find the confirmations of these breakouts. Whenever, example, rising wedge is breaking out, then you need to see. you know, the confirmation, and you can short and long from this rising wedge. And pay attention to this. Whenever these patterns break, there is a retest. Always, or most of the time, is a retest. Example: this if this this is an inverted head and shoulders. Okay, let me zoom in. This is the inverted head and shoulders on you know on the candles, right? And here is a neckline, and whenever it breaks neckline, what price do? Sometimes it retraces back to retest this neckline, okay, and then it bounce off. Then in most of the patterns, there is a retest. There is a retest. So you need to prepare for the retest. Most people call it a fake out, and there is a fake out as well, or bull trap or bear trap. But you need to learn the strategy to master these retracements, retest of the price. So how you can master it? Example, price is moving up. Okay, you are in, you enter in a breakout, and then now you are in 10% profit. What you need, you need to book your 25% or 40, 50% profit at the, at, like, if you are at 10% profit, then wait price to hit this retest zone here. You need to wait until price hit this retest zone, and then you can add more money, or you can, continue with your current position, and whenever it breaks out once again, you can exit 50% more. Now you left with 25% of your balance. Okay, and then if you have like 20% profit, you can exit 100% position. So this patience will come with experience. No one will tell you what to do. When you get these signals that I explained you in this Zoom meeting, you you need to trust yourself and trust these indicators and trust your own studies. And when you are in trade, when are you going to enter with this buy signal or sell signals according to the trend line, according to the trend on 4 hours, or any other strategy that you are using? You don't need to look at any Telegram group. You don't need to go to anyone to take advice. Trust your analysis and go for it. That's it. If you listen to multiple people, that there is a more high chance that you will lose your money. And whenever the market will go according to you, then you will regret why you listen to other people and do not trust your analysis. So trading is easy, as it's simple, right? And I'm doing it for years, and my winning ratio is very high. I'm not exaggerating anything whatever I said. My results speak. Now if you learn these techniques that I told you in this Zoom session, then you need to practice and give it some time. Okay, so I recorded this session, so now I will upload it in YouTube, and you can ask me any question right now if you have.